What's up guys, welcome to a new video, welcome to my YouTube channel. In today's video I'm gonna go over inverse fair value gaps. Like I said in last video, which was about fair value gaps, I said next video I'm gonna go over inverse fair value gap. So today the day has come, I'm gonna go over inverse fair value gap. Inverse fair value gap is slightly the same as fair value gap, but it has its differences. So let's just jump right into the charts. So inverse fair value gaps is, first of all, is mostly used by ICT and SMC traders. This is an ICT concept, all right? This is just something that is really important because people that don't use ICT or SMC, if you talk about inverse fair value gap, they're gonna be like, what the fuck is that? So an inverse fair value gap is formed when a fair value gap is invalidated by a candle's close. Okay, this is really important, not just the wick, by a candle close. I'm gonna draw this. As you can see, we have this fair value gap right here. Okay, so for it to be invalidated and for it to become an inverse fair value gap, the next candle, or not the next one, it can just be the second, the third, or the fourth, it doesn't matter, but a candle has to close above it. So for example, if the next candle would just be like this, and the wick is all the way like this, it doesn't matter. This is not an inverse fair value gap. However, if the next candle is like this, you know, and there's the wicks here, for example, this is an inverse fair value gap. Why? Because price closed above it. And the same is exactly the same in the opposite direction. So if we have one, if we have a fair value gap right here, okay, you want to see next candle like this, or the next 10th candle, you want to see close underneath like this. Okay, not with the wick, it has to be a candle closure. This is really important, guys, don't forget about it. So the next thing, an inverse fair value gap might indicate a potential reversal in trend. Not always, but could be a potential reversal. That's really good to know. Also, the invalidation of a fair value gap shifts the role of the gap. What does this mean? If we have a bullish fair value gap and the bullish fair value gap gets invalidated, this will be a bearish inverse fair value gap. And if we have a bearish fair value gap that gets invalidated, it will be a bullish inverse fair value gap. Let me draw this. Okay, as you can see right here, we have a bullish fair value gap. All right, so if it gets, oh my god, if it gets invalidated like this, now this is no longer this won't be a bullish inverse fair value gap, right? We had a bullish fair value gap. So what is this? This is a bearish inverse fair value gap. It shifts the role, okay? You have to know this. And the same is in the opposite direction. I'm not gonna draw it. Easy, like price goes up, it's in an uptrend, then we have a bullish fair value gap right here. If it gets invalidated, it shifts the role to bearish. Same if we have a downtrend, okay, and we have a fair value gap right here that gets invalidated. Now, instead of this is a bearish fair value gap, but a bullish inverse fair value gap. I think it's pretty simple. I think you guys understand this. I don't have to say more about it. So when price comes back to the inverse fair value gap, we can use it for potential trade entries. But if price goes through like the inverse fair value gap, then we should no longer consider it, okay? Like I wrote down here, if the price rises past the top or the bottom of the inverse fair value gap zone, it is invalid and should no longer be used. What do I mean with this? I will draw it again. I could just have kept the same example. What do we have here? We have a bullish fair value gap. Okay, now this bullish fair value gap gets invalidated like this. Okay, Now, if we were going to use this inverse fair value gap, okay, if the next candle opens right here, let's say, and it has a wick that goes through it, now we can no longer consider or use this inverse fair value gap because it has been invalidated. Instead, if price goes into it like this and it doesn't close above the inverse fair value gap, in this case we can use it. But if price goes through it, we can not use it anymore because it will be invalidated. Very simple stuff. Now, like everything else, what I always say, don't trade purely off inverse fair value gaps. You always need all confluences like breaker structure, liquidity sweeps, indicators, candlestick patterns, whatever, but never only of inverse fair value gap because it doesn't work 100% of the times, just like anything else in trading. The last thing, and this is very, very important, so listen carefully, within a stack of fair value gaps, we look at the last one that was formed, okay? And only if that one gets invalidated, it is an inverse fair value gap. So let me draw this. Okay, for example, right here, we have a stack of fair value gaps, right? We have 1, 2, 3 fair value gaps. We look at the last one that was formed, and by that, I mean like the first one, so the last one, okay? This was the last one, or the first one that was formed, however you want to take it. Only if this one here gets invalidated, then it's considered an inverse fair value gap. Why? Because price could just move up like this here, inverse this one maybe, and then here go down, right? So only if price does like this, it goes up a little bit, and then only if this one gets invalidated, we can use it as an inverse fair value gap. Okay, same as in the opposite direction. If we have some fair value gaps right here, it's gonna come down too. Only if this one gets invalidated, it will be considered an inverse fair value gap. So if price goes here, okay, and then it wants to go down, this is still not an inverse fair value gap because we still have one here. Price must invalidate the last one. So like this. Okay, I'm gonna show you the example on the chart. For example, right here. So for example, right here, what do we have? We have 1, 2, 3 fair value gaps. Price went up into this fair value gap and kept going down. But if price would have gone up like this, this would still not have been inverse fair value gaps because price could just have gone down. It has to be invalidating the last one, okay? If we look under, we have a better example. We have this example right here. We have a fair value gap right here, and we have another fair value gap right here. What do we see? We see that the first invalid gap right here gets invalidated. Here the candle closed a little bit above it, but anyways here it closed more above it, as you can see. This is still not an inverse fair value gap because we still have this one to the upside that still has not been invalidated. So only if price would have gone through this, it would have been an inverse fair value gap. Okay? And this, guys, you have to keep it in mind because otherwise you're gonna do it very wrong. This is very, very important. For example, how can we take trades of an inverse fair value gap? Right here we have this inverse fair value gap. Alright, like this. So we create this bullish fair value gap. What does price do? Price goes a little bit up, then goes through the bullish fair value gap. So now this is a bearish inverse fair value gap. In this case, we can wait for price to come back to the zone without going through it with the wick. And what does it do? Price goes a little bit down, retraces into the inverse fair value gap zone. Price touches inside it, As soon as you can see a candle close outside it, like here, candle closed, went in, then it closed outside, we can take a trade, we can put the stop loss above this high or above the inverse fair value gap and risk to the next round liquidity right here or whatever you feel comfortable with. But like I said, we don't use purely inverse fair value gap, we always need something else. This was just an example to show you guys how an inverse fair value gap would work. And that's all for this video. Write this down, take a screenshot of it, do whatever you want with it. I've literally said everything when it comes to inverse fair value gap. There's nothing else, so thanks a lot for watching. I hope you enjoyed this video. I hope you learned from this video. If you have any questions, let me know in the comment section or talk to me on Instagram, on TikTok. I will help you. I'm here to help. I'm trying to make this as simple as possible. Subscribe on my YouTube channel for more trading content. Hit the like button if you like this video and see you guys in the next video. Brah!